Thanks for starting your week with us. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. We have plenty on our plate today, so let's get started with today's highlights. The two Koreas differ much in wealth, to say the least, to the point where the combined wealth of a few of South Korea's richest stands well above North Korea's GDP. Despite their income putting them smack in the middle, many Koreans in the middle class identify as sitting in lower ranks as they feel unprepared for post-retirement. President Park Geun-hye has called on Korea's trade sector to improve its competitiveness in main export sectors, diversify its export items, and boost the role of smaller firms. These were the key suggestions put forward by the president at an event on Monday, marking the 52nd Trade Day, commemorated annually on December 5th. She said despite unfavorable conditions in the export sector, some significant achievements were made. Korea's exporters have been struggling due to low global oil prices and commodities that led to negative growth in outbound shipments every month this year. Meanwhile, the country was ranked the 6th biggest exporter in the world, up from 7th last year, and also expanded its market share in the world's two biggest economies, the U.S. and China. 5 South Koreans made it onto Bloomberg's list of the world's 400 wealthiest people. And something interesting to note from this is that the combined wealth of these South Korean billionaires well exceeded the GDP of a country not too far away. Our Kim Min-ji has more.
South Korea's 5 richest people have more money than North Korea's GDP. According to Bloomberg's Billionaires Index, 5 South Koreans made the list of the world's 400 richest people. They are Samsung Group Chairman Lee Gun-hee, Amore Pacific Chairman Seo Kyung-bae, Samsung Electronics Vice Chairman Lee Jae-yong, Hyundai Motor Group Chairman Chung Mong-gu, and SK Group Chairman Choi Tae-won. Combined, their assets make up $36.4 billion. According to Statistics Korea data, that's more than 18% higher than the GDP of North Korea, which stood at just over $29 billion last year. These 5 make up almost 3% of the South Korean economy. To give the figure some context, Korea's richest person, Lee Gun-hee's wealth stood at $11.9 billion. That means he could buy 30,000 Ferrari 458 Spiders. The world's richest was none other than Bill Gates, the co-founder of Microsoft, whose assets stood at $83.4 billion. Fashion brand Zara owner Amancio Ortega ranks second, followed by Warren Buffett of Berkshire Hathaway. Kim Min-ji, Business Daily.
The operating profit of Korea's major securities firms is expected to double this year. According to local market research company WiseFN, the projected operating profit of 10 securities firms listed on the Kospi stands at nearly $2.7 billion this year. Hyundai Securities is forecast to have grown by the largest margin, up over 670% from last year, followed by NH Investment and Securities and Daeshin Securities. Korea Investment Holdings is predicted to be the top earner with $433 million. Now, experts say the improved performance is not only due to the boom in the country's stock market in the first half of this year, but also structural reforms that resulted in cost cutting and an inflow of funds. And now it's time for a look through last week and this week's stock market action. And for that, we have economics reporter Choi Jin-seok from SBS CNBC joining us on the phone today. Hello, Jin-seok.
Thanks for having me, June.
All right, let's get started by looking at the Korean stock market. Tell us about Friday's close and its overall performance last week.
Yes, both the Kospi and Kosdaq retreated as global equity markets were disappointed at additional measures the European Central Bank or the ECB rolled out a day earlier. The Kospi fell by about 1% to close at 1970 level on Friday, while Kosdaq lost 0.7% compared to the previous session. The ECB last Thursday, local time, announced a new stimulus package, including a further 0.1 percentage point deposit rate cut and the extension of its bond purchase program from next June to March 2017. The ECB has already kept its deposit rate at minus 0.2%, meaning the ECB charges banks that want to keep their cash in the central bank rather than allowing them to collect interest. That's why minus deposit rates are viewed as a stimulus measure to boost lending activities in the private sector. However, the markets were not satisfied with the amount of the ECB's rate cut this time. In terms of the extension of QE, the markets wanted something more, including an increase in monthly bond purchases from 60 billion to 70 or 80 billion euros. Key U.S. stock market indices finished lower by more than 1% after the ECB meeting. So the Korean market extended its negative reaction from this meeting as well. On a weekly basis, the Kospi fell by 2.6% and the Kosdaq by 1.2%. Blue chip stocks, including Samsung Electronics, KEPCO, and Hyundai Motors, all finished the week significantly lower.
Then how did the Korean stock market close on the first day of this week?
Both indices finished with a slight downtick today, giving up most of their earlier gains. The Kospi rose by as much as 0.6% in the opening, helped by a strong rally in the U.S. stock market over the weekend. However, a massive sell-off by foreign investors still added downward pressure throughout the Korean stock market. After selling more than 200 billion Korean won or 170 million US dollar worth of stocks over the last 3 sessions, foreigners dumped more than 150 billion Korean won or 120 million US dollar worth of stocks today. Foreigners still seem to be cautious about putting more money into one of the most liquid emerging markets ahead of major policy changes in the U.S. and fluctuations in the Eurozone.
Now, what kind of market events do we have lined up for this week then?
U.S. November retail sales released on Friday local time will be in the spotlight. Market experts expect the figure to increase by 0.2% to 0.3% month on month, continuing its upward trend from October. Consumer spending accounts for 70% of the U.S. economy. In addition, robust domestic consumption has played a role in offsetting some of the headwinds, including falling oil prices. That's why market participants are expected to take a close look at the data to assess economic fundamentals in the U.S. What we also need to remember is that U.S. November employment numbers continue to fuel momentum for a rate hike in December with 211,000 newly created jobs. A lift up by the Federal Reserve or the Fed seems more likely than ever, and some say it's a done deal. In this sense, retail sales data will be a key measure that can further bolster support the Fed's stance on raising rates for the first time in nearly a decade.
And it looks like we should also keep a close eye on how other assets move in the market this week.
That's right. I would say oil and foreign exchange markets will receive a lot of attention this week. The price of West Texas Intermediate or WTI last week fell by 4.2%, breaking its key support level of $40 a barrel. The Organization of Petroleum Exporting Countries, or the OPEC, failed to agree on cutting its daily production. Rather, it raised its production ceiling from 30 million to 31.5 million barrels a day. Although the decision was widely expected, market participants were clearly disappointed with the result, dragging oil prices further down. As analysts are increasingly betting against a rebound, we need to see how this key commodity price will move and affect other financial markets this week. We also need to keep an eye on how the US dollar and euro will swing throughout this week. The euro rose by 2.6% against the greenback, marking the largest weekly gain since May last week. A rally in the euro can be attributed to weaker than expected stimulus measures announced by the ECB because accommodative monetary policies often lead to the depreciation of currencies. That's why we need to see if the euro will keep its momentum or the US dollar will revive its upward trend. This has been Choi Jin-seok from SBS CNBC.
Meanwhile, Korea's tech-heavy secondary bourse, the Kosdaq, has recorded the 7th largest rise among 60 stock markets worldwide. According to Bloomberg data, as of December 4th, the Kosdaq recorded a 26% rise, while Korea's benchmark Kospi rose 3% to rank 24th. Venezuela's stock market recorded the highest rise at nearly 240%. And this was largely due to the collapse of the Venezuelan currency, the bolivar, and an annual inflation rate of over 100%. Venezuela was followed by China's Shenzhen and the Argentine market. We have seen the largest number of companies handed credit downgrades this year since the record set in the aftermath of the Asian financial crisis. Local credit appraiser Korea Ratings said it cut 58 companies' ratings this year as of the end of November. Now, that's just 5 less than the worst level seen in 1998 and 11 more than last year. Only 8 companies had their ratings upgraded, which was just half of last year's figure. The sector's hardest hit was construction, still bogged down by an industry-wide slump in place since the 2008 global financial crisis. Others were in shipbuilding, financial capital, oil, machinery, airlines, and distribution. Last Thursday, Korea's top financial regulator said it plans to complete credit evaluations on 330 major firms this month to deal with those performing poorly. Korea's 2 largest automakers, Hyundai Motor and Kia Motors, are poised to reach annual sales of 1.2 million units in Korea this year, thanks to robust demand for sport utility vehicles and new sedan models. According to industry sources, Hyundai Motors sold over 632,000 units in the country in the January to November period, while its affiliate Kia Motors shifted 474,000. With their combined sales surpassing 1.1 million units so far, insiders forecast the automakers will easily break the 1.2 million mark this year for the first time in 19 years. Hyundai Motor alone is expected to sell some 68,000 units this month, helped by the company's promotional discounts and the government's temporary individual consumption tax cuts. A new report has shown that the vast majority of Korea's middle class actually identify themselves as members of a lower social status. The report also found that most of them expect to experience poverty in their later years. Our Park Se-young has the details.
65% of Korea's population falls in the middle class. For a family of 4, households with an income range of about $1,600 to $4,800 a month fall into the group. Statistically, those who earn between 50 and 150% of the median income are categorized as middle class. However, according to a survey by a local research institute, most middle-class Koreans identify themselves as lower than middle class. Based on responses from over 1,100 middle-class households consisting of 2 or more members in their 30s to 50s, only 1 out of 5 Koreans consider themselves middle class. And many had even more serious concerns about their futures. Nearly half of those surveyed said they were unprepared for life after retirement, and 40% expected to fall into the low-income sector during their later years.
Most people think they're in a worse situation than they really are. Because of this, people are more likely to drop out of the middle class after retirement.
In order to maintain their middle-class lifestyle, the researchers are encouraging households to accumulate assets that provide income after retirement. Park Se-young, Business Daily.
Travel around Korea is expected to undergo a transformation from next year, as aviation companies are set to begin operating small passenger jets in regional areas. The new air taxis will significantly reduce often long travel times. Our Lee Ji-won tells us more.
This is a small regional jet that can sit 50 passengers. With a speed of 900 kilometers per hour, it will reduce what was a 6-hour express bus journey between Yangyang County and Gimhae City to less than an hour. A one-way ticket will cost about $77, approximately twice the bus fare. The company introducing the service will begin operations from as early as next year. It also plans expanding its operations to Jeju Island in time for the 2018 Pyeongchang Olympics.
With a speed this fast, it will only take 30 minutes to get anywhere in South Korea, and 50 seats are just right for the Korean market.
Other companies are also jumping into the market. In May, another small air transportation company bought these jets to operate from Ulsan Metropolitan City and Pohang City to Gimpo City. The government is also looking to introduce a similar service for Ulleungdo Island and Heuksando Island within the next 5 to 6 years. This would turn a 5 to 9 hour trip involving trains, buses, and boats to a quick 1 hour plane ride. The government plans to build a short 1,200-meter runway on each island.
The plan is to minimise difficulties in travelling to and from these islands for both residents and tourists, and hopefully boost the domestic economy. Also, it will be of great use in monitoring illegal fishing vessels and rescue actions.
The government says it will seek residents' opinions on the project and will work to minimize environmental damage. 이지원, Business Daily.
And that does it for now. Thanks for watching, and we'll be back tomorrow at the same time, same place. Until then, goodbye.